Yeah, I think we have no participants yet, but it's been going.
No participants. I guess everybody's busy today, huh?
Yeah, getting ready for the last few weeks of tech season.
Are they feeling the rush too?
We're feeling the rush, right? Uh, but as always, the show must go on. Oh, there we go.
Yes,
Well,
people coming in.
yeah, we have people coming in. Good morning, everybody. Good morning, and we're streaming live on Facebook as well. Um, Man, yeah, this heat got me a little bit mixed up, and it's already what 76 degrees already, and it's 11 a.m. out here in Soledad. But how are you guys today, Diego, Franco, Mr. Lopez?
Well, pretty good. One of our air conditioning units went out a couple days ago, and they
Uh-oh.
just got it running, so we're starting to
Oh,
cool down a little here.
it's a
Nice.
tech season rush and heat, right?
Yeah.
Well, welcome everybody. Thank you for joining us today again. This is our part four of our series. Excuse me. Today we're focusing on Schedule 1A. Um, this what we're going to be covering today is more of a practical overview, so you can recognize when and how to use this form. And today, we have, as always, Mr. Lopez, our CEO and founder of Latino Tax Pro and Lopez Tax, Diego, our MBA, also prepare and sales representative at Latino Tax Pro, and our overall accountant, Franco. Anything else you guys wanna add?
Not at
I
all.
want to say hi, everybody. Good to see you guys again.
Yeah. So let us know where you're following us from. And if you're here on the Zoom platform or any of our social media platforms, thank you for joining us today again. And we're just gonna kick it right off. And Mr. Lopez, can you give us the bigger picture of what the difference is between Schedule 1 and 1A, and why does it matter to preparers?
Sure. 1A is a new form this year, but I'll give you a little overview over both forms and what they're used for. Schedule 1 reports above the line adjustments to income. For example, student loan interest, IRA deductions to help the preparer arrive to the adjusted gross income. Schedule 1A, which is new this year, reports below the line specialized deductions created by the big beautiful bill, or OB3 as we call it, which are then subtracted from the AGI to reduce taxable income that can be used whether you take the standard or itemized deduction. So 1A really is the new form to report the new deductions.
Yeah, that makes it much easier. Um, and of course, when we run out of space, this is where we add these additional forms, right?
Yes.
Cool. Um, so I wanted to start with part one and bringing in Diego on this side, and more than that, the modified adjusted gross income. I think people, at least taxpayers on my end, in my experience, always tend to confuse those and say, "Oh, that's my gross income," or the modified adjusted gross income. What's the difference? Um, Why is that important here, Diego?
So it's important to really understand the adjusted gross income and the modified gross income. Main reason because they're in certain deductions, right? And credits that we're talking about, there are phase
Mhm.
outs, and it's something that we need to take into account as we prepare the Schedule 1A. To keep in mind that the modified adjusted gross income will ultimately impact if they qualify or not qualify for that deduction.
Now, and that's great information. What should preparers be careful with when calculating it?
Yeah. So when calculating that, you want to make sure that you don't double count everything, right? You don't double dip. Make sure that your formula is solid, and that you're actually plugging in the correct formula. But I would defer here to my colleagues here for additional comments.
Was that Franco?
Yeah. So just an additional thing is like any other credit or deduction can define the modified adjusted gross income slightly. So you got to be careful that you take into account every credit or deduction, right? Because that could be the difference between determining if you guys get the full credit of these new deductions or you don't get the credit, right? So you got to, take into account your foreign income exclusions, your student loan interest, your IRA deductions, all the other deduction and credits that you could possibly get will affect your modified adjusted gross income. So you got to be sure you get all those in before it determines this Maggie.
Nice. Um, thank you, Franco, for that information. And so that's a broad overview of what modified adjusted gross income is, and that's usually you can find that in part one of the Schedule 1A, and then on part two we have what's been affecting or benefiting, better said, uh, the tips, especially for those that work in the restaurant and all these other industries. Mr. Lopez, on this one, who would qualify for the no tax on tips?
Well, first of all, you have to have a social security number to be able to qualify for the no tips. And you need to be into an industry that regularly and uh, pays tips or collects tips. It's tips that you would receive. I know there's a term for it. You guys probably know what it is. But for industries that normally pay tips, like restaurants, hospitality, but unfortunately, our industry is excluded from tips. But then I don't know about you guys, but I haven't gotten a tip in years. But
No, the same here. No tips, Mr. Lopez, from the clients.
Yeah, not a monetary tip.
maybe one of these tips, but
Yeah. It's like, what do you mean I owe this year? That's I'm like, well, here's a tip for you. Let's start planning the following years, or especially when they have a business, estimated payments, and start making adjustments. But um I don't want to get off topic, and I know last week we were talking about, or a couple of weeks ago, a couple of sessions ago, we talked about the no tax on tips. And um, Diego, what are the most common mistakes, if any, that you've seen if you've encountered those?
Yeah. So on the tips, I will say that that reporting has been spot on, especially when I double check the final pay stubs. Like how Mr. Lopez mentioned, a lot of these industries have been already reporting the tips, so they've mastered that process, right? How do we report the tips? So regarding tips, me myself, I haven't seen much or if any discrepancies on on the forms and the W-2s. It's been more on the newer deductions like overtime, so forth.
Nice. And Franco, thank you, Diego, for this. And what should preparers double check before claiming it, if anything?
So yeah, just something that we should obviously be checking is the service industry, right? So even if they got a tip and they're like, "Hey, I got a tip for this," right? If they're not in the qualified service industry, then they cannot take that credit. Also, it has to be qualified tips, so they have to be reported on your payroll. So it'll show in the W-2 box 7, I believe.
Yes, sir.
If you want to verify it, it'll be on your last pay stub, but it should be there reported through the payroll software. If it's not there, unfortunately, we're not going to be able to take that. So those are two of the very common things that you should definitely have. Without those, you basically cannot use it.
Yeah, definitely verifying not only the W-2 but also the pay stub is always a good tip for that wasn't not a pun intended, but it flowed. Um, Tips for tax preparers and especially the receptionist or whomever's managing your phones to be able to ask for that information. Okay, so now moving on to part three. I think has been one of the most confusing portions of it, and it has been no tax on overtime. Um, Mr. Lopez, do you care to give us a brief overview of what we talked about in the last couple sessions regarding overtime, how to measure
Sure.
it?
So we're talking about on overtime, the part of the pay that is overtime, because it's time and a half. So it's that half time that gets taxed. I mean, that gets tax free, and it's $12,500 or 25,000 for a married couple. And once again, I'm sorry to say we got to have a social security number to be able to get that deduction. And and I believe it phases out at $250,000 for a married couple.
300,000.
300,000. Okay.
Three
What
hundred
about a
thousand.
single or married filing separate? Oh, do married filing separate get to deduct
Nothing.
this? They don't.
Nope. That's one of the drawbacks from married filing separately. Yeah. Mr. Lopez for single was 150,000.
150. Okay. Thanks.
Awesome. And I know last a couple weeks ago, Diego, you went over how to calculate it. And that's kind of bringing back what Mr. Lopez said, the income, what it qualifies, and what income source actually qualifies. I know you gave us a small formula, and if you want to go over that again.
Yeah. So after reviewing the formula, analyzing the numbers, what's tax free at the end of the day is a third of that income, right? So calculating the income, we like Mr. Lopez said, we do have to one go into the W-2 to see if there's any overtime reported. If there isn't, and the taxpayer says, "But I did work overtime," then that's when we ask for that pay stub. Start plugging in the numbers, and yeah, from the formula, it is going to be a third of the total overall overtime income that's deduction free. It's not the entire overtime income. So that's one thing that we as preparers need to keep in mind, that once we look at the pay stub, we can't just plug in that year to date total overtime number. We still need to do the formula and adjust the tax free portion of that.
Yeah, it's always important. Thank you, Diego, to always do your due diligence. It's very, very important. Um, and I know uh, Franco's usually good at asking for this information. I've been there, sat through a couple of his calls, not because I just happened to be there, but any red flags that preparers should be looking out for, Franco?
Yeah, so it's and just to mention also, a lot of people asked last time when we went over the overtime deduction, a lot of people asked about double time. So a simple formula for that one is, instead of taking the third of it, you're going to take a fourth of it. So
Nice.
OT versus double time. OT would be a third, double time would be a fourth. But
That's good to know.
back to your question. Um, a big one is probably just verifying the payroll reports. I think a lot of people are probably, employers and employees are probably wanting to take advantage of the overtime deduction. So a big red flag would be like just verifying that the income that's reported as overtime is actually overtime, rather than it could just be regular earned income, but they're categorizing as overtime. So you just want to verify, ask the right questions. Did ask the taxpayer, did you work overtime? If they say, I didn't think so, but there's some reported on there, then boom, that's a big red flag right there, right? So you just want to ask the right questions and verify that they have an understanding of what's kind of on the payroll reports.
Awesome. And in that topic, who qualifies for overtime? Uh, the difference between an exempt and an hourly employee. Can you go over that a little bit, Franco?
Yeah. So a salaried employee is the exempt employee, right? So they're exempt from the overtime rules. They do not earn overtime, whether, like, for example, I'm a salaried employee. So if I work 50 hours this week, I do not qualify for the overtime. If I work 38 hours, I get my same paycheck. So that's kind of the salaried exempt employee. What the difference is, if I were hourly, then those 10 hours after I work the 40, then those would be 10 hours of overtime pay. So that's kind of the difference between a salaried employee and an hourly employee.
Awesome. And right now, that's great, Franco, Diego, Mr. Lopez. That this has been great information. And at this point, I want to invite the audience as well to submit your questions or any tough situation that's been coming up within the Schedule A, whether it was the low overtime, tips, the modified adjusted gross income. Submit those questions. If you're here on our Zoom platform, submit it in the Q&A. We'll be able to answer those so we can keep track of those. But I wanted to bring in the part four that we haven't really covered yet, but it's talking about the car loan interest section. Um, Mr. Lopez, can you give us what makes this deduction a little tricky?
Well, first of all, it's got to be automobiles that were finished production in the United States. And the deduction is for interest on personal passenger vehicle loans up to a limit, which is $10,000. Now, for business, if you buy your automobile for your business, then the interest is deductible. So what we're talking about here are personal passenger vehicles. And that's a really great deduction. This car loan interest was around when I first started this business, it was around for a long time. And then they took it away. But now they're bringing it back. So that's great.
Yes. One thing that I've been seeing, Mr. Lopez, from clients who've purchased a 2025 vehicle, right? They're receiving letters from the car dealership saying, "Hey, we have record that you purchased a 2025 vehicle," and they'll give that taxpayer all the information needed to hand to their tax preparer. So something to look out for is to look out for the letter from the car dealer provider saying that they qualify for that. One document to look.
Nice.
That's a good it's good information to have. Thank you, Diego and Mr. Lopez. And where do you feel like preparers may not understand it the most here?
Maybe part of it is was it a vehicle that was, oh, I know, here's what somebody asked me. Does it need to be a new vehicle or can it be a used vehicle?
Has to be a new vehicle, 2025. Yeah, can't be a 2024 new used.
Well, what if it's new to me?
Well,
Yeah, yeah. See, because but it's always good to clear those up. So it must be a brand new vehicle, off the lot,
Financed, not
financed.
leased, right?
Yeah, not least. Yeah, the
Uh,
client in fact, they came in yesterday and they said, "Hey, we bought a new car," and they got that letter that Diego talked about, or Franco, and I said, "Great. Well, let's see how much your loan interest was," and the loan was 0.9%, and they bought the car in November and they didn't start the loan until December.
Oh,
So I think the amount of interest was like $10.11.
Wow.
full
Yeah,
deduction this year.
yeah, absolutely. Yeah, so Mr. Lopez, do you feel like this can be double counted with the Schedule C? But usually that's where the main other vehicles kick in. Schedule Cs.
Yeah, if if you're not careful and you're not paying attention, yeah, it could be double counted because but most preparers are pretty good about watching out for that. But be careful because you can't double count it. It goes on one or the other. And I would recommend putting it on the Schedule C so you can reduce self-employment tax. That's where you'll get the better bang for your buck is on Schedule C.
Awesome. Yeah, no, it's a great tip, Mr. Lopez, and of course, as always, due diligence is really important. Um, Now, moving on with part five, I'm literally just going down the list. Um, the enhanced deduction for seniors and who qualifies for these? And what is this new deduction anyways?
Well, for seniors that are 65 and older and are collecting Social Security, they can qualify for an extra $6,000 deduction for each one if they're married, or 6,000 for a single one. And that's pretty good. That's a pretty good deduction.
Yeah, I was gonna ask either Diego or Franco. Feel free to jump in if you have any clients that have actually qualified for this deduction, and are they happy or sad that they're getting it?
So good
So
question here, Vicente. I have quite a few enhanced senior clients, and for the past couple years, they've been owing a couple $100, not so much. With this deduction, and it reduces that balance, and if anything, it now producing a refund. So the clients that I've dealt with, I work with, they're so excited, so happy that they're getting something back, and it makes me feel great because they're smiling, and it's nothing that I did. It's all their credits, right? They're what they're allowed to get, and yeah, it's helping them just cover their balance and start getting refunds. One thing that I have also noticed there, and going there really really fast, there is phase outs, right? So anybody making more than 75,000, they won't get the entire $6,000 deduction. However, it is prorated, and most of the clients are getting about 90 to 95% of their uh, enhanced senior deduction, which is big benefit for them.
yeah,
Yeah.
similarly, I had a client just a few days ago as well. Um, they actually made probably about $25,000 more than their prior year. But because of that enhanced senior deduction, it was two of them. They got a $12,000 deduction, and I think the balance due was only about $200 more than last year. So the client called me up after her appointment. And she's like, "Hey, without that enhanced senior deduction, based on the income increase, how much would I have owed if I didn't have that enhanced senior deduction?" So I did the calculations and stuff, and it saved her about $3,500, $4,000 in balance due that she would have ended up paying. So definitely a good benefit there.
So you became a hero, huh, Franco?
In some ways, yeah.
Mhm. Yeah, it's always fun. The clients definitely love it when their preparer is knowledgeable and understand the difference and are up to date and actually can look into what can I possibly do for you, my client. So that's always great. That's one of the reasons why people reach out to individuals like yourself. And then here's a question that I have. Well, what if only one of them is over a 65 or over?
Yes, so I have seen that as well, and it's only the individual with 65. So if married finally jointly. The husband is 66 years old and the wife is 64. Only the husband is going to get that $6,000 deduction. The wife would have to wait till next year.
Awesome. Gotta wait, right? Thank you.
65. 65
Yeah,
is your ticket in.
yeah. Yeah, no, and it's always great, as I mentioned. It's always great to be informed and be up to date with the laws that change. I think ultimately, Mr. Lopez, is this something that's set and pretty much as a law now, or is it for the next few
Yeah.
years?
Well, that's a good question because a lot of these uh, OB3 deductions are um, going to sunset in 2028.
Mhm.
That means they're going to go away unless Congress renews it. So
Yeah,
take advantage, leverage it when you can. Like that 1A, that is scheduled to sunset in 28.
2028.
Mm, okay. That's, yeah, good information. Mr. Lopez, clients were asking us, so how long is this for? Is this forever? And it's yeah, so it's now we got some more information.
The only thing that's forever in taxes are taxes
Yeah.
Bills.
and bills
Um, Mr.
and
Lopez.
death.
Yeah, yeah. Those are the two for sure things. Mr. Lopez, as the CEO and the head, the lead in our company, especially the tax company right now, what do you feel like money is being left on the table?
I feel like a lot of people that are doing it themselves, they're not taking the one of the most overlooked credits is the earned income tax credit because you don't have people are under the misconception that you have to have children to get the EITC, and you don't. You just have to be between the ages of 19 and 65 and earn a certain amount of money, and you can actually have some money returned to you. So that's one that's really being left because there's a lot of single people out there between those ages that earn enough to qualify for the EITC. And that's one thing I hear from the IRS all the time that's the biggest credit that people are leaving money on the table.
Yeah, I had an experience like that not too long ago, a couple of weeks ago. I had a client scheduled an appointment, um, came in and they were doing was it DoorDash, I believe it was. So they didn't know what to do there. I helped them out. They happen to have two kids, and he mentioned, "Wow, I was only gonna get 2,000 from my refund when he was doing it on his own." And when we were done, he was like, "Yeah, charge me whatever you want." And then
Oh,
I was like, wait, we don't do that. We do have set prices, so let's take a step back. But it's just his excitement of wow, I didn't know I qualified for these credits. I'm finally understanding what these credits are about. Um, I like the fact that you took the time to explain line by line what this even means. Because when I'm doing it by myself, uh, this his words, not mine. I'm gonna be honest. Sometimes I don't know if I'm doing it right. And I said, of course. And we all have that feeling. But this is what we do. This is the profession that we enjoy doing, helping out clients maximize their refund in the legal way and deductions in the legal way. So it was great to hear. Actually, I don't even know if he actually left a good review. I'm gonna follow up on that one, but
yeah.
yeah, but it was a good one. I should have recorded him. But what I'm trying to get at is being informed, staying up to date, doing your due diligence, asking those questions, probing those questions to see what else did they have, what else can they possibly qualify for, is where I'm getting at, and that's something that has been taught to us by Mr. Lopez, and that's where he wants to teach this out in Latino Tax Fest this year.
Best.
Yeah, the fest.
Couple days.
A
I,
lot of new stuff at the fest this year.
I think we're only like 94 days out.
Ah, I got a lot to
94
It's
days.
do.
it's gonna
Yeah.
fly by.
Yeah. I can't wait to see everybody there. But we always enjoy bringing out information like this, experience people. One of the new things that I'm really looking forward to is checking out that network to network section where we're going to be having individuals like Mr. Lopez talking about how did I go from one office. I still get the stories from when you started back in that small office off of uh people, if you're from the area, John Street. And out to our location now, our Davis location, which is, if you have been out here, you know which one we're talking about, where we produce a quite amount of tax returns from that one, and then opening it up to 5, 6 locations. Do you want to tell us a little bit about that? What to expect of what you're going to be talking, Mr. Lopez? An overview.
Yeah, a lot of people ask me, when you started this business, did you expect for it to grow like this? And I go, yeah, this was no surprise. I couldn't have done it if I did it without planning. So the thing I tell people is you got to learn how to run a business. And there's a lot of ways to do that. One of them is your local junior college, community college has courses. You'd be surprised, some of these universities, I know Stanford has a great entrepreneurial program. UCLA has an entrepreneurial program. Your local university, you can get your MBA like Mr. Ruiz has. And but it takes training, and oftentimes it takes outside training, and you have to really want it. You got to want it in your heart to be able to do extra work without killing yourself. And that's the thing that we have to really watch out is take care of your health. Don't, take care of control your stress and control your weight and your exercise. Because you're sitting here 10 hours a day, eating 3 meals a day. Let me tell you, the weight packs on and it doesn't come off easy.
It- I
But
ju-
yeah,
yeah. If I may add, it does take time to gain that weight, but it also takes time to lose that weight. So it's not like you're gonna blow up, but we don't notice it because we're sitting down. It's client after client, especially when we're jam packed. So yeah, these are some great tips, Mr. Lopez, to to maintain that health, that healthy lifestyle that we want to maintain, especially when summer's coming around the corner. Everybody wants to look good.
And I'll add on to that too. It's by taking care of ourselves, it's going to reflect. And when our clients walk into our offices, they're going to see a recharged, rested, prepared, ready to help them versus a preparer who hasn't rested properly, is exhausted, and that taxpayer may think twice about getting that return there. So it's about being at the best optimum for yourself and your clients.
Yeah, absolutely.
yeah, good point.
Yeah, that good old saying, right? Health is wealth,
Or you are what you eat.
or you are what you eat.
Okay.
Uh,
All right,
oh
guys.
man, that's a good one. Um, yeah. So, well, with this, I don't see any additional questions or anything else. I think we covered a lot of this great information. We are also taking suggestions if there's something that you guys want to learn, know, some financial literacy, whatever it is that's in mind. Um, we are open to those suggestions, but we're going to be working on more series like these, and start inviting, especially after the season, start inviting our speakers out, so they could share some of their information and knowledge. But as always, thank you everybody for taking the time for joining us today, and all the information that you guys gave us, the feedback, we take it into consideration, and try to apply it as best as we can. But before we end this session, I'm gonna start with Franco. Any last words before we close out?
No, I just want to say thank you guys for watching us through all the socials and the live stream here. I actually really enjoyed this. I got advice, which is basically like you don't know something, you're not an expert at something until you can teach it to others. So this actually hopefully helped everybody else, but it also helped me, right? I need to be very clear on how to explain these credits, these deductions, right? Not just to you guys, but to my clients. And that helps me better understand my understanding. So it was great, and see you guys whenever we see you guys.
Thank you, Franco. Diego?
Well, I'll leave a tip. It's not tax deductible, but the tip, what I recommend and I've noticed clients appreciate is when we read the 1040. Let's explain to them what their income was. Let's explain to them where the deductions. Let's show them how the numbers are flowing. That's going to give them an understanding, and also you yourself an understanding. From there, you're going to create that trust, that bond, and a loyal client. I see you at the fest.
Stop by the booth, right?
Yes.
Awesome. Yeah. Thank you, Diego, for that. And Mr. Lopez, any last words, advice, or suggestions you want to give out
Yeah.
to the crowd?
Visit our website, latinotaxfest.com, and sign up before the end of the month because our prices do go up. And like they briefly mentioned, we're going to have some financial literacy classes this year. We'll be giving some how to grow your practice. We're going to have some network to net worth classes where we're going to have attorneys, uh, professional wealth managers, and service bureaus, uh, professionals there to answer your questions. So this is the place to grow. This is the place to join a community of like-minded professionals. We'd love to see you there.
Awesome. Thank you, Mr. Lopez, and thank you out here to the panel. This has been a great closing to our 4 week session that we have here. And thank you everybody for tuning in, joining us during your busy time. We appreciate that, and hopefully a lot of you can make it out to the fest. And if it's going to be your first time, it's only gotten better from the last few years. So, and if you were there a few years ago, it's changed a whole lot. So what I'm saying is we're evolving, we're being more dynamic and more intentional. Thank you, everybody, and hopefully everybody has a great rest of their tax season, and we'll see you soon. Thank you.